Well, now it's time to join Mr. Bismarck Rewane, the CEO of Financial Derivatives Company, to talk about the 2025 budget proposal, which was made today by President Bola Tinubu. All right, Mr. Rewane, thank you for joining us on the news at 10. I mean, it was a big day today. The budget has been proposed in front of the National Assembly. And today we saw something very unusual, where we saw first 47.96 trillion naira. Next thing, we're hearing 49.7 trillion naira. It's been tagged budget of restoration, of course, securing peace and rebuilding prosperity. But when you see what is going on, the situation of the country at the moment, what does this name really mean for the ordinary Nigerian and for the economy of the country?
First of all, let me accept the fact that what the president announced was 47.96, and the budget office came back later on to say they meant 49.76. We call that a transposition error. Again, the devil is in the detail, right? So, yeah. But those things happen at times, but this was an unusual development. Now, the restoration budget said policies, promises, aspirations, lags, and impact. So what exactly does this mean? And what does a name mean? First of all, in the year 2000, President Obasanjo called his budget the budget of consolidation. In 2003, he called it, no, in 2000 he said the people's budget. Yeah. 2003 he said the budget of consolidation. And in 2005, he called it a budget of reform. Fast forward, Jonathan in 2011 says a budget of fiscal consolidation. Then he went further in 2012 to say consolidation, budget of consolidation, inclusive economic growth and job creation. And then in 2015, remarkably, he said a transition budget. And that was the year in which he transitioned to Buhari. In 2016, Buhari called it a budget of change, because that was the change mantra. He said in 2020, he's called it budget of sustainable growth. And in 2022, he said budget of economic growth and sustainability, switching. Then last year, President Tinubu said it's budget of renewed hope, which was part of the campaign mantra. And then this year, he says restoration budget. What are we trying to restore? So a name is a name, but it sends a correct signal. But when you're looking at a budget, you have to ask 5 questions. 1, how much are you willing to? How much are you going to spend? That is where we had the question of 47 and 49. Yeah. The correct figure is 49 trillion, 49.76 trillion, and not 47.69 trillion. How much are you expecting? How much do you want to earn? We have that on the revenue side. Is there a deficit or a surplus? There is a deficit of 13 trillion naira. How are we going to fund the deficit? From borrowing, right? Domestic and international borrowing. And the budget is also a tool of economic management. So let's go on and see what it means. The budget assumptions are as follows. In 2024, the growth target was 3.88. What happened eventually, we got to 3.19. We're short by 0.69. This year, the target is to grow at 4.6%, right? Ambitious, but it's a good showing there. Inflation, the average last year, the target was 21.4. We ended up, the average for the year 32.69, but today we are 34.6, far short of the expectation. Now, the target this year, it was 15% in the medium-term expenditure framework, but I think it's been pushed up to 15.75. How you're going to go from 34.6 to 15% is a major issue. That assumption is a bit bold and a bit, I would say, it's a bit far-fetched. The exchange rate last year, the target was 800 naira to $1. We ended the year, or we are ending the year at about 1685, but this is the average of 1482. So the currency fell by 46 to 47%. The target this year is 1500, and that is what I think is responsible for that figure. In the medium-term expenditure framework, the exchange rate assumption was 1400 naira to $1. So that change between 1400 naira to $1 to 1500, which happened in the last 3 days, if you multiply the 100 by the figure of the dollar figure, you find that that is responsible, maybe responsible for the 2 trillion naira change. Oil production target last year was 1.78. We ended up at 1.31. It was a 26% shortfall, and that's significant. Now we are gunning for 2.06 million barrels of oil a day. Crude oil price last year was 77. In reality, we came out at 79, so there was a little bit of room. Now the target is 75. We do not think that we will achieve 75. But if you look at the figures here, expenditure, this was done based on the speech, but now we have to change that. The expenditure is 49.76, not 49.7, not 47.96. The revenue is 34.82 trillion, right? So, and the deficit is 13.14 trillion. In dollar terms, it's $31 billion. Here, the expenditure, the revenue is about $22 billion, and the deficit in dollar terms is about $8.48 billion. And the president did say that 15 trillion naira is going to be used for debt service, which means that, yes, we are going to be servicing our debt, but we're going to be paying for it. We're not going to print money, which was what happened in the previous period. And also, it tells you something. The broad goal, the president is very ambitious and aspirational. He wants to get the economy from $364 billion to $1 trillion in a matter of 5 years. To do that, you need to be growing at almost 30 or 40%. So in the past 3 decades, though, the government has, in the past 3 decades, Nigeria has achieved a budget surplus only 2 times, in 1995 and 1996. Those were the Abacha years. And the budget deficit is good for stimulating the economy, but you need to know how you can go from $364 billion to $1 trillion in 5 years. That's not going to happen. So we think that 5% annual growth rate can get you somewhere, but it's not going to get you to $1 trillion by 2030. Right? Now, this is what it looks like. Total GDP output is $364 billion. All of us consumers, we constitute 65% of that. The investors constitute about 30%, and the government 4%. But there's fiscal dominance. So what's happening is that the government multiplier is less efficient than the investment multiplier. And so the money they've taken from us for petrol subsidy has moved from consumption to government. But this is the big picture, which is net exports. Our exports are going to go higher, our imports are going to go lower because of the exchange rate adjustment mechanism. So that's a good thing. That's a very good thing. Now, savings equal investment. If you don't save, you can't invest. And that's the clear thing. But investment is not foreign portfolio investment. The president alluded to the fact that he's expecting foreign portfolio investment. Foreign portfolio investment is hot money. It comes in and it goes out. So we have to make a correction on that. Now, what is important? That the GDP per head is $1,597 per head. In 2024, it came down to $900 per head, $910. So it's going down. The debt per head has come down. If all of us owe $438 per head, every Nigerian, now it's $418 per head because we paid off some. Foreign debt service is $46 per head. That's what every Nigerian will pay out of his pocket in 2023, and now it's gone up to $47. And external reserves, gross external reserves, not discounted for encumbrances, is about $175 going to $172. So what you normally compare is net external reserves. If you net out our external reserves, it's much lower than what it is. Now, so these are the assumptions. Optimistic, the medium-term economic expenditure framework says that the assumption is $665 naira to $1, and the parallel market was 1,170, and the difference was 504. We think that's a bit optimistic. This is the medium-term economic framework, but now 2025 is 1,400, but the president has increased that to 1,500, which is more realistic and more likely to be achieved. But if you go back and see exactly what the naira is trading at, as of today, the fair value of the naira is 1,151, which means the naira is 24% undervalued. There's an advantage in that because it allows you to begin to claw back. So we think the naira will claw back, and the goal of 1,500 will be achieved in 2025. So that's the good news, aligning the exchange rate to market realities. But what the question you are going to ask?
Yeah, I was going to ask exactly.
Is that will you be better off this time?
What does this mean? By this time next year, what should the ordinary Nigerian be looking at? Good or bad?
2025 is going to be better than 2024.
Okay.
But not without a struggle. And what do we have to see? One, major inflationary drivers are going to be abating. We are not going to get to 15% as expected, but I think we'll probably be around 25%. And that's good from 35 to... Petrol price next year, we think it will be flat at 1,200 per liter. Today it's 1,050. So expect to pay at least 150 naira more. Diesel price will fall to 950 to 1,000 liter, thanks to Dangote producing a lot of diesel. The naira will appreciate and will be stable at about 1,500 to 1,550. We think it's going to be 1,550. Okay. The president expects to make it at 1,050 naira is not going to break the bank. Inflation target of 15% is too optimistic. We expect it to be around 23 to 25%. Base case for GDP growth is 4%. Best case scenario, we achieve 6%. If we get 6%, we should be celebrating. So, generally speaking, cautiously optimistic, but 2025 will not be as hard as 2024.
All right, I guess that's good news. Some form of good news for the ordinary Nigerian. Well, thank you very much. Mr. Bismarck Rewane, CEO, Financial Derivatives Company. Thanks for your time.
Thank you for having me.